We've got an earnings alert on Nike. The stock bouncing back a bit after a little bit of a steep post-earnings drop. Let's get the numbers. Let's talk about China with Seema Modi back at CNBC HQ, talking about one of her hometown heroes, Nike. Seema.
That's exactly right, Brian. Take a look at the stock. Shares of Nike are turning around after slipping as much as 2% here in extended trade. It was a solid beat on its bottom line, but the company did say margins were negatively impacted by higher input costs, primarily due to incremental tariffs in North America. Separately, Nike reported Greater China sales of $1.85 billion. That's up 23% this quarter, but it's a slower pace of growth than last quarter when sales grew by 27%. Still, Nike has been able to steadily grow its revenue in the country over the past 5 years, targeting the Chinese consumer, using platforms like Alibaba to sell its shoes and apparel. And in the earnings release, outgoing CEO Mark Parker really emphasized its growth in digital. Those comments come as Nike severed ties with Amazon back in November, which was widely seen by Wall Street as a sign that Nike is doubling down on its e-commerce initiatives and its direct-to-consumer model. The stock has been trading in record high territory all this week, up 35% in 2019, but it is worth noting it is underperforming one of its key rivals, Adidas, which is up about 65%. Brian, the earnings call has begun, and I will get on it. Back to you.
All right, Portland, Oregon's finest, Seema Modi. Seema, thank you very much. All right, Nike, what a run it's had this year.
Incredible.
Any reason to either still own it or buy it here, Pete?
I would wait for a pullback, and part of the reason for that is I think it's stretched when I look at the valuation and I look at where the growth is right now, and you compare it to some of the others in the athleisure world, and it's very stretched. It's plus 30 in terms of the PE right now, so this is something where I think you'd rather wait. I'd like to see this actually get some kind of a pullback. We might not get that, but I'd expect to see if it's going to work, I think there are other names that'll work better, because when you look at the growth prospects of a Lululemon, for instance, growing faster, and when you look at that, given the multiple, I still think that Lulu's a better buy right now. Nike, I feel, is a little bit too expensive.
Yeah, I'm on board with the Lulu. Nike, I don't think there's anything wrong with that.
Did you call Pete a Lulu?
I did call him a Lulu. Yeah,
so you're on board with
I'm on board with Lulu. That's his
Not
new
the
name.
first time it's been said.
So as Lulu said, Nike's doing quite well. However, they do have some margin issues. Some of it had to do with tariff, but a lot of this is priced into what's going on with Nike. So now they have the digital transformation, which is going well, but it's got to continue to go well. And it's almost as if everybody is priced in all the good news for this name. So when it comes to Nike, I think you wait for that pullback. It doesn't mean just one day, though. This could take a couple weeks to kind of get the froth out of it. Then you want to go back in.
The thing is, the froth in the stock doesn't seem to abate. And so if you think about the strength, so China was maybe a mild disappointment. I think people in the street was really looking for 24% growth, came a little bit light. But strength across all geographies, the fact that the gross margin expansion, some of it is DTC based. And I'm not sure we know where this can go. I think if you look at a brand that has total control of its destiny, if you could choose one, and I'm not saying that they're going to go without traditional distribution because everybody needs that, but Nike is such a powerful global brand. You guys are talking about athleisure. I'm not sure we know what that multiple is supposed to be right now. The historical multiple, I don't think really.
And again, you're throwing around acronyms. DTC, direct to consumer. It's important. But this stock, Tim, has been a double in the last 2 years, but revenues have not doubled. Right. So is anything there out of whack?
Well, I just high single-digit EPS growth, which is what these guys I think will deliver comfortably with U.S. comps that they look like they've gotten back in control of North America. That gives me a reason to stay the course. I'm long the stock.
Yeah, so it's a mid-teens EPS grower, and it's a high single-digit revenue grower. And when you think about 23% growth in a region like China, given all the headwinds that we've had over the last few months with China, and there's nationalistic issues. I mean, think about this. Arsenal's game was not played in China just the other day because a player said, this company is obviously right in the crosshairs of a lot of this sort of behavior. We saw what happened with the NBA. So when you think about it, I mean, to do 23% in China, that's great, and it's only going to be gravy from here on out. I'd also make another point. Seema mentioned that Amazon deal, so they had this distribution deal. So the notion that they are doing well enough in their own DTC strategy, direct to consumer, they made this acquisition of Russell Wilson's startup, TraceMe, a couple months ago. This is like a technology platform that connects influencers, athletes with, I think they're doing a lot of things really well. So to your guys' point, this stock broke out in late September after that last earnings announcement and at $90, and it really went straight to 100.
And
right?
I think 90 is the target that I'd be looking
right.
for on a pullback. And John Donahoe, when he takes over, which he will in January, that's a whole different thing, Brian, because now we're talking about a new CEO who actually has his arms totally around that world, DTC, the whole thing. That, I think, is something very positive. But when does that kick in?
Yeah.
Probably takes a couple of quarters.
I'm just looking at the balance sheet and the income statement, okay? EBITDA has increased from what, 5.4 billion to 5.7 billion or whatever it is on an annual basis. Revenues have gone up by 5 billion, but that's it. It's growing, to Dan's point, a mid-single digits, but the stock has doubled in 2 years.
We're agreeing with you because we're waiting for that pullback because we think what you're implying is maybe it's a little expensive, right? So we're looking for that
Or
pullback
people are
to try to
betting
buy
the growth is going
There
to
are other
really-
places that are growing much faster.
I know. We're going to talk about
Or the
Lulu
growth-
later.
I know,
on.
I'm just saying.
Hold on. We're going to talk. Yeah, or the growth is going to.
Right.
One of those two things has to happen.
I think you have to question whether or not the growth is going to accelerate given the environment that we're in. I think they're doing a lot of good things, but is growth going to accelerate? Is there something more incrementally that they can do that's not priced into the stock today?
Look, athleisure, again, go to sneakers. Innovation, I know it's kind of a word you apply to technology, but it applies here. And I think Nike is known as the innovator. If you look at athleisure, you see what Lululemon's doing. You see what Athleta's doing. These are places where Nike, as far as I'm concerned, is competing and arguably is in a pole position because they are more closely assigned. So again, innovation, higher margins is the reason why you're paying more for the stock, Brian.